PATTRICK SMELLIE Last updated 0500, September 28, 2017. Grant Spencer has been left as acting governor of the Reserve Bank. Opinion. This week's monetary policy update. A one-page press statement at the 6-week halfway mark between full monetary policy statements by the Reserve Bank should be a bland affair. There are two reasons for that. Firstly, the immediate outlook for inflation remains benign. Secondly, it will be the first statement by the acting governor of the Reserve Bank, Grant Spencer, after the official departure on Monday of the governor of the last 5 years, Graham Wheeler. Read more. PATTRICK SMELLIE quality, not quantity, is the real water debate. Winston Peters says he'll change the Overseas Investment Office and the Reserve Bank rules, while journalists have to try to find something to say about the dead zone between the general election and formation of a new government. The last thing a caretaker central banker wants is to make waves for a caretaker government. PATTRICK SMELLIE. Anything that destabilizes that framework could be expected to raise the risk premium on New Zealand financial assets. However, the arrangements governing the central bank are a crucial question for the next government. For a start, the global orthodoxy about inflation targeting and central bank independence has been under sustained criticism, which has grown in the 9 years since 2008's global financial crisis. Inflation has virtually disappeared from most developed economies, despite independent central banks making huge unorthodox bets on money printing to try and kick it into life. The United States Federal Reserve is only now starting to unwind its quantitative easing program as signs of inflation emerge there, but the jury is still out on whether we are now in some kind of permanently low inflation world. If we are, say the critics, shouldn't monetary policy target something else? Labour, the Green Party and New Zealand First all support variations on amendments to the 28-year-old Reserve Bank Act, which makes inflation the only target of monetary policy and gives the central bank governor sole decision-maker powers. Graham Wheeler departed as the Reserve Bank governor this week. Labour favors an employment target, while New Zealand First would also add an exchange rate target. Both would formalize the use of a committee of external and internal experts, including the governor, to decide monetary policy settings and publication of reasoning, as happens in many other countries. Even the national part-tiled government has been waiting all year for a review of the Reserve Bank's decision-making arrangements, with Finance Minister Stephen Joyce apparently keen on a committee decision-making process. Any of these changes would be in the mix at the same time as the search continues for a new Reserve Bank governor, due to start next March. The scene, therefore, is set for a period of uncertainty regarding a key element of New Zealand's international story as a stable, investable economy. Investors in the New Zealand financial markets don't park their money here because it's an important global economy. Rather, the country has a combination of a stable, reasonably well-understood monetary policy framework and routinely offers better interest rate yields than similar larger economies. Anything that destabilizes that framework could be expected to raise the risk premium on New Zealand financial assets, creating the conditions for the ugly combination of higher interest rates and a lower New Zealand dollar. That pattern has already been evident in pre-election financial market trading. While exporters might welcome a lower dollar, and New Zealand First would claim it as a political victory, it is a recipe, along with higher interest rates, for inflationary pressure coinciding with reduced consumer confidence as the price of imported goods rise and heavily indebted home buyers faced higher mortgage repayments. An implicit understanding of this dynamic may lie behind the fact that Labour's party vote in the country's most indebted city, Auckland, lags well behind Nationals. None of this is to say the monetary policy framework is perfect, should never be changed, or that the financial markets should control what are ultimately political decisions. But it is to say, be careful what you wish for. Stable monetary policy has been such a consistent feature of New Zealand's economic settings in the last 3 decades that change should be considered with great care. Business Desk.